Hello everyone, hope you're all good. So today we're going to be talking about something a little bit different. So today we're going to be looking at the three indicators that you actually need. So now I'm going to say something that might annoy a lot of traders. You don't need 10 indicators. You don't need a secret strategy, and you definitely don't need to keep jumping from system to system. In fact, your chart looks like a rainbow threw up on it. That's probably why you're not profitable. Because today, I'm going to show you the only three indicators you actually need. And more importantly, how you use them properly. So when most people start trading, they do the same thing. They download RSI, then MACD, then Bollinger Bands, then Stochastic, and then they saw something on TikTok at 2 a.m. And suddenly your chart looks like a spaceship dashboard. I've been there too, and here's a problem. More indicators doesn't mean more clarity. It usually means confusion, late entries, and missed trades. Because half of them are telling you to buy, the other half are telling you to sell. So instead of adding more, today we're going to strip down the three tools that actually make sense when you use them together. So these three indicators each answer a different question. What's the trend? Where's the value? And when do I enter? So let's break it all down. So first up, we have the moving average. This is your trend filter because here's the truth. You don't make money by predicting reversals. You make money by riding trends. So instead of guessing, we let the market tell us. So a simple setup would be 50 EMA, which would be a faster trend, and a 200 EMA, which would be a overall direction. Now here's how you read it. If the price is above both, we're in an uptrend. If price is below, we're in a downtrend. And if it's chopping in between, you stay out. That alone will save you from a ton of bad trades. But here's where people mess up. They treat moving averages like entry signals. They're not. They're just telling you, hey, you should only be looking for buys or only look for sells. That's it. It's as simple as that. And next, we have the RSI, which is the Relative Strength Index, but not how most people use it. Forget overbought means sell and oversold means buy. That's how beginners lose money. Instead, we use RSI to find the value within a trend. So here's what I mean. In an uptrend, RSI dipping between 30 and 40 would be a potential buy zone. That's kind of like an area where the strength is dipping and we could see a potential reversal in the price. And now in a downtrend, RSI pushing towards 60 to 70 is a potential sell zone. So instead of fighting the trend, you're waiting for the price to pull back to a better entry. So think of it like this. You don't chase a train while it's moving full speed. You wait for it to slow down, then you hop on. That's what RSI helps you do. And now, just to put things into perspective, to find the indicators, you'd obviously go to indicators, type in RSI, Relative Strength Index, click on it, and now, well, I've got two now, so we'll bin that one. And now you can see the Relative Strength Index. So here we have about 30, and that is, like I said, a potential buy zone, 20 to 30. As you can see, price then goes bullish. And then we get to about 70, and that is another area that we just mentioned where a price starts to go bearish, so a potential sell zone. So now you kind of get the idea of the indicator and how it works. And our third, and honestly the most important, market structure or support and resistance levels. This is where you actually decide, okay, I'm entering right here. Indicators don't move the market, price does. So we look at the more simple things. Higher highs and higher lows, which would give us an uptrend, and lower highs and lower lows, which would determine a downtrend. And now we combine that with levels. For example, if we're in an uptrend, price pulls back, RSI is near value, and price hits a previous support level. Now you have a confluence, and that's when trades start to make sense. Not because of one signal, but because multiple things line up. So let's kind of put this all together. Step one, check the moving averages. Are we bullish or are we bearish? Step two, wait for RSI to come into value. Not overbought, not oversold, but with value. Step three, watch price at key levels. support or resistance, and that would give us our structure. Now, overall, that is pretty much a setup. No guessing, no clutter, and no overthinking. Just a clean and repeatable process that you can do over and over again. Now, let me be real with you. This isn't magic. These free indicators won't suddenly make you rich overnight. But what they will do is simplify your trading, improve your timing, and help you stay consistent. And honestly, consistency is what most traders are missing. So if your charts are overloaded right now, try this. Remove everything, start fresh, and just use these three because sometimes less is more. If you found this helpful, make sure to drop a like, subscribe, and let me know. I might break down an actual trade example next. But before I let you go, if you guys are new to trading and are looking for a place to trade, make sure you check out the link in the description below. You can trade on the same platform as I do, or simply if you just want to trade alongside with me using the same platform as I do. So yeah, as always, thank you for watching and I'll see you in the next one.